Good morning, everyone. Good evening or good afternoon if you're in Asia. Very good morning if you're over in Latin America. It's where are we? We are 7:38 here in London. It's freezing again this morning, uh, but it's February, I suppose. Happy New Year if you're celebrating in Asia. It's Lunar New Year today. Ramadan starts tomorrow. It's here in the UK, Western Easter. It's the beginning of Lent tomorrow, so it's Pancake Day today here in England, the UK, where everybody uses up flour and eggs and milk and starts to think about Lent and abstaining from something, usually chocolate and coffee in my case. But I can't think I'm doing coffee this year. I might take something on instead of giving something up this Lent. But anyway, more on that to come. So happy New Year, New Year of the Horse for those of you celebrating in Asia. I hope you have a good one. Long holiday in China. Chinese markets closed all week. Many Asian markets closed as well for a few days this week. So wherever you are, enjoy and markets roll on. Not a lot of news yesterday. Not a great deal today. Obviously, the focus really is back on the situation in Iran, the ongoing talks. It seems like the Iranian regime are desperate to keep talking, but meanwhile, the Americans have moved another another battle cruiser fleet into the Gulf area. So yeah, rhetoric cranking up as well. So let's see what the rest of the week brings. Main news this morning has been the. Let me just show you the calendar. Has been the UK earnings numbers, jobs numbers, and the claimant count higher than expected. Unemployment went up to 5.2%. Earnings have slipped from. It's still very healthy, but it was a bit of a surprise. Slipped to 4.6%. The unemployment number, also the critics of the government are obviously going to jump on that again, so it's more bad news for the government. The headline's going to be, but there's been some technical changes in the way the counting's been done, a bit like it in the UK, in the US, and so it's a bit overstated. But however, it was a significant miss, and therefore we've had this big weakness in sterling. Remember, we were long sterling the other, I think on Friday night, and we stopped that out yesterday. Can't remember how much we lost on that. It was like 12 points, but we've hit target one for the short from last night on cable. So cable's dumped right down. I've pulled the stop loss down to target one, so we got a minimum win on that of at least 30 pips. And now I might trail that down as the US and the UK, the UK London sessions kicks off. The cash session kicks off. Obviously, the forex section kicked off about an hour ago, and we are much lower. If you look at the 15-minute chart, we got out, or I closed it after about, as the numbers came out, just after 5-6 minutes. It's continued to decline, so we might pull this down if this continues to decline. I mean, sterling's weaker across the board. Euro pound 87.82. Euro spiked up on that. That was also on the back of a pretty good German inflation in line at 2.1%. Later today, we got Canadian inflation as well. So that's the main remaining news of the day. I think we had a that was a short as well. That was also closed out this morning. This was where was it? What are we getting on? This was Friday night as well, wasn't it? 13th, yeah. So this one's been. I needed to close it out yesterday. I wasn't doing anything. We were long this one on Friday night. I nearly closed it out yesterday morning when I first looked at it. I left it and then it came back, and it was last time I looked was late last night, and it was still hanging around the entry level, but obviously overnight it's declined. And I woke up this morning and we got out as that weak UK data collapsed. So that's a losing trade on that one. But just before we run into what else we've got open, Euro CAD was also. Let's just have a look at all the open trades we've got. I'm not sure I've marked them all on here, to be honest, but Euro CAD was the other one that was. That's still. I'll close that one out as well at the end of this session because that's not going anywhere. That was supposed to go higher. Gave up the ghost. I'll close that one out as well. So that's going to be a loser. The Euro CAD. Dollar was short. USD New Zealand was another one from Friday night. Not US, what we're doing. Kiwi for Kiwi dollar was that's not doing anything either. It's closer to its target than its stop loss, but it's not doing much. I might leave that one because it's actually in the money, that one. What else? And we were short, just for completeness, we were short the SPX as well. 6807. That's tripping a bit lower, yes. I might pull the stop loss down on that one. And the other one from last night was a long Swissy yen, which is a bit of an odd one. Not one I trade very often. They tend to cancel each other out, Swissy yen, but obviously the yen's been under some pressure recently. I'm very much in the news. So Swissy yen, we were long that last night, and that's from around about what was last night. This is the hourly. So that's gone backwards as well. I might probably close that one out as well. We got in 9 o'clock-ish time. I can't remember what time it was. It was 21. We probably got in around about there. Can't remember, to be honest, but that's out the money. And again, I'm probably going to close that one out because that was anyway, that one looks like that one's going to be out of the money as well. And we're still moving down here on the hour, so that's definitely getting closed out as well. So that's a loser, Swiss yen. From last night. So anyway, let's get back to what we normally do here for these opening charts. We're 15 minutes away from the open. We've had a nice move on the FTSE, as you might expect, courtesy as the sterling's weakened stock markets here in the UK have moved higher. So the FTSE here has moved higher. So here on the hourly chart, that would have triggered really during this time frame. Might be more to come during the day. If you look at our 5-minute trading platform, I don't normally do this with the FTSE because it's not as nice to move around as the DAX, but it was short there. We had the outside. It was looking to be long, so it's not really playing games. It's moved higher and it's not reverting. It's really a trend following. If we look at yesterday's Heiken Ashi, I'll go back to yesterday's Heiken Ashi webinar. Look at what the here on the 5-minute, there's the data. Sorry, there's the data at 7 o'clock. It says 2 o'clock there, but it's because the time syncs out. So there's the data at 7 o'clock on the 5-minute time frame. So strong candle. Remember, we would have got filled it all the way up here, but we're still very much in the money. Initial burst higher, no wicks to the underneath. So that's to the south, so it's a positive. See how the momentum is drained away within 20 minutes. Then we get a dodgy green, but still green candle, so we're still in that. We would have got out there and then re-entered here at 35 minutes past, and then we're still long. So we're in the money on that with our Heiken Ashi candles. And but obviously you can see the spread is all the way up here. So you buy in it, you're all the way here outside of the candles. That's one of the problems with the Heiken Ashi candles. If we look at a standard candle setup, and I'll using our crossing here, I'll actually use our MACD because it's got standard candles on it as well. So the candle pattern here on the 4 minutes, there we go. So there's the candle pattern. The MACD and the signal line have crossed early, in fact, and the interestingly enough, this MACD would have got you in earlier here before the data dropped, but because that's 2-minute time frame, that's why. Let's make sure we're looking like for like. There we are. So there's the this has gone long earlier, actually, interestingly. So this was gone long at 5 minutes past 6. We had the cross. I mean, it's a weak cross, but there's the positive cross there. So that would have taken you long there and kept you in. So you've got all of that. So there we go. Our MACD and parabolic SAR would have been our best performer this morning. That would have gone long there. There's the cross. See, we've gone short here. Hasn't worked out. That's more than compensated for by the long from here, and that's still long here. And if you've been really conservative, you've got your stop loss down at the parabolic SAR. I tend to trail it up behind the candle. Interesting gap there at 7:30 for some reason. But I'd still be long. Because it's FTSE, isn't it? So this is still long and running nicely. But again, you see the gap's the spread's a bit heavy. But we know MACD and signal line nicely positive. Nice angle on the on the trade there. Sorry, can you see this properly? No, my head's too big. Sorry, let's just make me a wee bit smaller. There we are. So angle nice here on the signal line and the MACD line. Parabolic SAR nicely below price action. So we've got a really conservative stop loss there if you want to use it there. I might have been there. Probably given this is a 5-minute chart, I'd probably rammed it up, pulled it up here now. Sort of the top of that wick, not quite the bottom of the previous candles we've gone down, because we're probably looking for a bit of a pullback, but very much in the money on the FTSE. So the DAX, which is the one we normally trade at this time of the morning, chopping around here in the 5-minute chart, so nothing going on there on our MACD and SAR. Let's have a look at our trend following. That'll be similarly choppy, crossing moving average. 5-minute, no, there we go, up, down, down, up, down. So lots of volatility, no direction. Oh, hang on a minute, I haven't got that taken that because I just had the no real direction, although bias to the upside here from this spike here. So short-term DAX is relatively long here from 736. No clear direction, no. There would have been a trade there. But again, the stop loss initially should have been all the way down here, or even all the way down here, the low of the day. And if you'd pulled it up too aggressively, that one might have taken you out. But that's still long from a trend following point of view, even though it's not trending. You see it's going sideways, but it's biased to the upside is what that is telling us. So if we open our normal, actually, let's do the VWAP as well for the sake of completeness, for with our Heikin Ashi candles. So this again, see the choppiness. Short, quite a good long there, but out again, red. Long, weak one, messy short there. No, there's only a clear candle there, so you've been in there, but then out there. Long there, then out there. See, it's chopping around. It's not one to be making money as a trend follower today and chopping around. So the short term, we're getting a bit of, as you normally expect, which is why we use the stochastics and the Bollinger Band mean reverting strategy. There's our chop, but even here, this sideways action along the midline of the Bollinger Band is not really generating any signals for us. The last one. So technically, let's have a look how that would have triggered. So the last touch of the outside of the Bollinger Band, well, it was there, and then 5 minutes later it was there. So really, just stay out. That's a better one. It's a bigger bodied candle. Then it's moved up here, but you would have only got in on that one, but that's then right at the top. So I'm out. I'm not doing anything on that. That's waiting sideways. So probably going to wait until the open volume has come through at this point. We're 10 minutes to the open, so nothing going there on the DAX. There's our pre-market high from this morning at 24,871. Our pre-market low was much closer. That was at 520. My dog was up at 520. My poor old wife had to get up and take her. Go and see her. She's very old. She's 15 now, our eldest dog, and not necessarily on her last legs, but she's got a bit of canine dementia, and so she doesn't know where she is. So she was up at 5:20 this morning, and then hasn't eaten a breakfast this morning. But anyway, we'll see it sort her out in the ridge. So 24,679, 680 says our pre-market low, but that's obviously a spike low, more conservative areas there at 24,700. So 24,700 is our real low on the DAX this morning, but nothing's going there. We're sort of, see how we're middling even with this mean reverting strategy. We've had a move down, so we're sort of biased to the downside in the higher time frames. We just take this up quickly to the hourly chart. You can see we've been under in the under half of the Bollinger Band since lunchtime yesterday on the DAX, and we've been lower, and then look, we finished lower, and then we've gone lower in the Asian session, and on pre-market low, as you say here, was in the 5 o'clock candle. So bias to the downside. So we may be looking for, if you're trading the 15-minute or the 30-minute, you want to be looking for shorts rather than longs, because the turnaround today, the 20-hour moving average, all the way up there at 24,820. So 5-minute is still moving along. So is this a floor that's forming, we shall say? So is the 24,700 our potential floor for today. Let's just put that in as well at 24,700. So is this our floor for today? Big round number where we're seeing buyers. So if we come into that, go down to test the pre-market low and then go a bit low and then bounce back, that could easily happen at open. So just make that a oh, that's a green, that's a blue. Leave it as a, just needs to make it a dash. So there we are, and make it only one. So there are two pre-market low area. That's the actual pre-market low, and that's that 24,700, the purple line. So watch that as we go into the autumn. Bit more activity, props on the FTSE. So not mean reverting, but there we are. We've pushed to a new all-time high as well this one. Let me just double check that's correct. I'm not sure that is correct. I think it might be. Yeah, no, it's not. Pre-market all-time intraday high. It was up there at. I thought we'd gone over 10.5. That must have been a mistake when I mentioned that. So just make that 10.530. I think 5:30. Oh, that was it. It was the same as our MT5 offer, wasn't it? 5:30. So 10.530. Let's put it in there. 10.5. It says 38 there, but let's say 8 points on the FTSE. Let's make it. I'll make it 35. It's a 5, isn't it? Not an 8. There we are. And I'll just change the text. 10.5, 35. Maybe tested today. So 10.5, 35 is our all-time high from last week. But we're up again Friday, Monday, and we're up again today. And that's the one we would have been trading on the back of that. And a trend follower as well, not looking to cross, or we're looking for some weakness. We are, and if we're looking to give some back, let's see what happens at the open. We need to see a clear cross on this pair. We've already touched an outside of the Bollinger Band, 5, 10, 15, 20, 25, 30, 35, 40, 45 minutes now pushing out, but we have realigned because of the data. That's the main reason we've moved higher. So let's have a look if that does actually revert. Let's quick back to the DAX. Where are we? We're 5 minutes into the head of the open. So this might be the one to be looking to take some shorts on if it peters out at 5. There we are. Certainly there will be sells around the 10,500 level, but we might perk through it or push through it first. Whether I doubt the momentum from the open would take us to 10.35 in new all-time highs, but we're in the zone here on the FTSE. So unusually, the FTSE is more active than the DAX on the London and European Open here. So DAX is still probably trocking sideways. There we are. I've got a bit of action here from the DAX, so it's moving a bit higher. This is looking a bit more likely, so we may move this higher. If you'd been brave enough to take that long here, you'd have been a little bit in the money, but might have been pushed out because it had gone against you initially. But that would have been potential very, very low risk entry, given that we were still going sideways, but going with the trend on this short-term time frame. Remember, we're still down on the higher time frame, but this might say you might have made a decision that this 24,700 level was the support, and where there was some buying filtering through. So we're seeing some buying coming through on the open. So that's looking a bit more of a plausible, or a bit more of a successful entry if you take it. To be honest, I probably wouldn't have taken that given the sideways action. I was waiting perhaps for the open to calm down. But interesting, this is that these previous levels they're not there for, well, obviously it was an entry level we took on the 6th of January, that's February, that's telling me, but it's still a level that's obviously been of some relevance at some point. So that could easily be a target level for this morning. It's just one of those things. Previous levels come into play more often than you would like to believe. But anyway, that's starting to tick higher. So we may be looking for a potential short if we get into this overbought area here on our stochastic. So we're watching that, but we're trailing this high. If we had taken this, or if I had taken this, my stop loss would now be, as soon as this candle's complete, would be whacked right under there, up there, so I'm not giving much back. If it does reverse on us quite aggressively at the volume of the open. Let's just have a quick look, see if sterling's continuing to move down. So I'm going to put just the sterling pairs in because that's been today's big move. So sterling is finding a floor, or has done for the last 20 minutes, at 135.54. So above 135.50 at the moment. This is looking potentially possible. It can't really decide. So we were down, we were up, we were down, we were up. This is a potential long here. In fact, I might just take that into one just to demonstrate. People say I don't trade enough when I'm talking about live trading. So my stop loss, I'm going to put it down here, 135.49. 135 under there. So I've got it 48 for the sake of and we're going to buy just one lot, confirm, because that's suggesting it's a bit previous. I haven't waited for that candle to complete. I know I should finish at 8 o'clock, so we'll see how that pans out. Fairly tight stop loss, but if we're going to start to recover, we might move up. This might be just a consolidation before we move down and we get stopped out. But let's see how the open plays with cable. So fairly weak entry because it's undecided. We've been nice move down, up, sold it off, down, but it took 10 minutes, up this 5 minutes. So it's quite a high risk long position there, because this hasn't really started to move. There's not a great deal of air between the K and the D line, and we're still in the oversold area. So we can stay down here for a while, can't we? When the momentum's to the downside, there'll be lots of orders going through on the top of the hour, the 8 o'clock. So could quite easily get taken out in the volatility of the open. Conversely, we could move up quite aggressively, perhaps into this area. Here initially, top of that candle there, 135.70, and then this candle cluster here, which takes us to the 20 period here, the Bollinger Band on the 5 minute at 35.80 zone. So anyway, let's see how that pans out. It's 5 cents in the good. Let's have a quick move back to Backsmith. Let's see if our indices is still holding up. So the FTSE might have gone the other way. It might have paused at this. In fact, it did here ahead of the open, but we then moved higher again. And the DAX, that week long on the DAX is played out. There we are. So it has continued to move higher as the opening trades start to come through. So that's that would be enough for me if we do get to this level. It's not really a target area, but it's an area we've been on before. So that would have taken out very small risk on that one, but really now looking for perhaps a reversal of this as we've moved forward. But remember, we've moved, the impedance has taken us from the 24,700 level, and we're now 75 points higher at 24,775 is being tested, hasn't it, in this opening volley of data. So we just click the volume back on, see how the volume's kicked up here at 8 o'clock as the time ticks through. So yeah, there we go. So that's would have paid out. Risky entry, but it's paid out so far. Certainly would have taken at least half off here, and got my stop loss. If we had got in here, I got my stop loss probably halfway between those, the wick of that candle, previous candle, and the current candle as we're moving up. Certainly at the moment, the bottom of the opening candle. So we've locked in any profits we would have taken on that, but that's a bit of a risky one as we go into open. It might be more cautious to try and fade this move if we can't hold this little cluster area here above this 24,775 area, which was a bit of a support area when we first came down this morning in the Asian trade. I remember that our high this morning in Asia was up here, 24,871. So still 100 points up to the good to test the high of the day so far. So we'll see how that pans out as well. So that's in the money. I would have been in the money. I say I wouldn't have actually taken that. This one I would have been long the FTSE based on the news movement. because it's followed through. And this, although it's gone into an overbought area, the momentum has taken us forward. Like I say, it's a trend following trade, not a mean reverting trade, whereas the DAX had been very much channel bound, sort of mean revert, not really going anywhere, waiting for direction. So the direction has come at open, basically. So that's in the money. Let's go back to our sterling position, which was very much in the money. Where's it? Obviously, yeah, I'm saying, but the one that was very much in the money is our end of day one, which was the real trade. This is has moved out, so there's our up candle. We were in the money a bit there, 35 cents. Up, it looks like it's run out of steam already. So we'll see if that floor holds for cable at well, initially here on the 5 minutes, 135, 55, basically 54.3 is that bottom there for that 20-minute floor here. 5, 10, 15, 20, 25-minute floor. If it's going to hold, we'll see. Candle's big enough to take it. The volume hasn't actually come through, interestingly, at the cash open, not as much as the actual as when the data drops. So we may be fading this one as well. But anyway, it's in the money. I'm going to pull the stop loss up to the. I'm not going to take it to entry, but just pull it up. Where's my stop loss gone? So we're going to edit this and pull this up. Pull this up to where do we get in? 35. I don't know, so it's got 55. Where's it gone? There we are. So it's just above the candle that we got in. So it does reverse a very small loss. So see what we got there in the FTSE to the upside. So that's at its first reversal, but positive 5-minute start and reversing as not as we expected, but that was our first target area, wasn't it? And our stop loss now. So if we had taken that one, so to be honest, I probably wouldn't have done. We are seeing we got our stop loss sort of here. So we made from 735 to 775. Call it 40 points, or best part of 40 points if you take the spread off. And our stop loss now is here at 46, so guaranteeing another 10 points at least if it reverses back to the stop loss. So stop loss would be now here. Let's put that on there. It's our stop loss there now. 2, so you can see it. Make it red because it's the stop loss. There we are. And that would have been our entry. That's our real green for go there. But so, is this enough to take long? No. Why not? Because we've ran to a key area and it seems to be stalling, and we've had this turn down in the stochastics. So technically, this strategy is now looking to go short if we get a clear cross of the K and the D line in these opening trades. So just to see how this first 10 minutes pans out. This is our preferred trading platform, the time frame, the 5 minute. If we go back down, let's say to the 2 minute, the 2 minutes probably already crossed. There you are. So the 2 minute is already giving you a short signal on this candle. In fact, on this candle now. So that would have given you a short on 2 minute, and the long on 2 minute would have been. Well, actually, it's sorry, let me just get them D correct. There we are. So the MACD's crossed here. In fact, it's been there again. It's a weak one, and you wouldn't have, that the 2 minute wouldn't have got in until there when it's already touched the outside of the Bollinger. And you see, it's more volatile. So probably again, the 2 minute would have been less likely to take that than more likely because we're at the top of the range here on the 2 minute, and then it's gone back against us. So if you had our stop loss, I'm actually would have probably taken you out, but then it's gone, continue to move higher, and then the next confirmation is there. So the 2 minute could have added there just before open, and it's continued to move higher. But that is now 2 minute is short from this candle here, and our 5 minutes is still waiting because it looks like it may have reversed. See, they've touched, but they haven't crossed, and the 5 minutes still moving up because it's still not completed, obviously. So that's still long. 2 minutes looking to go short on the DAX. What's happened across the pond in London? There we are. The trend is continuing to push us higher. So the trend is overriding the mean reverting strategy. So we are still go to our one of our. I keep pressing copy. I mean open layout. If we go to our MACD one, which is our more positive one, that just keeps trucking, doesn't it? So again, conservative stop loss would be here at the parabolic SAR now. You see it's scrolling up, but it's a lot to give back, isn't it? So I'd have probably been a bit higher again, and top of that wick now. Sorry, top of that candle. So count back. I mean, conservatively, you count back like 2 or 3 candles and have it there. Some people have it 1, 2, 3, 4, 5. That's a long way back. That's below the parabolic SAR. So that I would call like a catastrophic stop loss, if you like, the parabolic SAR. A more aggressive one is top of those candles there. A more aggressive one again is the top of that wick of the third candle back, but it coincides with the wick of the current candle, so that's too aggressive for me. So I'll probably split the difference around about there, 10, 4, 9, 6. So we're under the 10,500. We've got through 10,500. Profit would have been taken off as we've got there as well. I would have probably been one of those taking profit, given that we've had this nice run from 605. But the beauty of the trend following strategies, guys, is it keeps you in. Now then, this is the first potential sign of weakness. We've got a flattening. So instead of the parabolic SAR still going up and angled up in line with the price action, we've now got a flattening one. So if this finishes here, this might be a sign of we may have run out. We've got to 10,510, and that might be enough for these opening salvos, these opening moves. As you can see here, our sterling is starting to come back. We're now at 120. If you can see that at the bottom, you see the you can't see that, can you? Let me just get rid of. Let me just switch me off or move me up there, and hopefully you can see. Can you see? You can't really see that, but the profit on the is now over $1. So sterling's continuing to move higher as the FTSE moves down. So with my stop loss sort of about here, just see, obviously it's only one candle and we're still going biased to the upside, but there's a suggestion that this may be now starting to has run its course from when we first got in at 6:05. We are, I mean, it is 2 hours later, 8:10. The big move was here at 7 o'clock today to drop the main data. If you just joined me later, was the weakness in the UK and jobs numbers. I've lost my calendar to share with you. Here it is. The jobs numbers were the claimant count was higher than expected, but previous months it's positive, given that we have come down from 18,000 to less than 2,000. Earnings have also cooled, but that's probably quite good news, to be honest. But unemployment has gone to 5.2%. But again, it's some technical changes in that. So again, this dichotomy in the economy in the UK, like we've seen in many developed economies, those with jobs and are getting paid relatively well, earnings and bonuses are holding up. However, those without jobs are finding it difficult to find a job, and that's again coming through. That's supported by this data, the spike higher in the claimant count for this month lots of obviously retail positions being terminated, the seasonal employment after the Christmas season. So that's the reason we had that move in sterling this morning at 7 o'clock when that data dropped, and we are reaping the benefit of that here with this strategy to the upside. So there we are. We have had a bit of a pause, but from a red candle with 2 minutes to go, we are now a green candle again. The cable gain went to 135, and now at 107. So let's have a look at that's flicking around. What I'm going to do next time, I'm going to get an MT5 account and so I can flip between the charts much more easily than here with TradeLocker. And there we are. So as the bottom, we've moved up. Let's drag our stop loss up to entry so we can then amend our stop loss. 3561. Let's bring it up above that. So it's 3562, 3562. So our stop loss is there now, and that's a winning trade, whatever happens. And there you can see here the parabolic star setup has just triggered the long. So this would have gone long. We got in a bit earlier, didn't we, on the size of the candle on the other strategy, but on this current strategy, on this parabolic star strategy, the trend following, it's sort of triggered. It's actually it's not a clean. Well, I suppose it is. Yeah. So it's happened on that candle, and this is your entry if this holds, if that cross holds, because this strategy, the leading indicator is the MACD and the signal line cross, not the parabolic SAR. So it's all right because parabolic SAR can be quite choppy, can be quite flippy, especially in strong in horizontal markets like we've got here, and that's what keeps you out. Similarly here, you can see the MACD and the signal line not crossing greatly, but you see the histogram's still negative. It's just about trying to go positive as we cross here on this 5-minute time frame. So that is now, looks like that's complete. So that would have, if you didn't get in on that candle, you'd have got in that now at wherever we are. We got in obviously a bit earlier. So let's see what happens. It may just be a bit of a blip up and a move down to coincide with the up. So as you can see here, we were $1.35 and we're now 48 cents. So it's come back a wee bit on us there. But obviously this can't be a losing. Might be if we the fee might actually might end up losing a few cents on it. But if it gets back and hits our stop loss. But anyway, it's just for demonstration purposes. Remember, so FTSE is still long, but again, that first sign of hesitance hasn't followed through. So the candle's gone higher, even though the parabolic SAR has horizontaled out, and now we've gapped up this time at the moment. So again, we've hesitated at 10,510. We've now moved another 10 points higher as it's testing 5,000. We haven't actually got there yet, but 10,520 to the upside, and it's still long. So our stop loss now sort of up here, or just below that wick is where my stop loss would be now, 10,501, so above 10,500. So actually, let's just put that in as the trend starts to develop. So my stop loss is say not below. That's the 5. Remember, this is only a 5-minute chart on the FTSE. So I don't really trade this level. So my stop loss there below the wick of the previous candle and the low of the candle before that. So candle 3, if you like, of the current candle pattern, even though this one's not complete. So it's really candle 2 there. But that was my first, it's flattening the parabolic SAR. That would have been a more conservative stop loss at the parabolic SAR itself. Signal line and MACD line still saying this is quite nice, still positive distances. We've gone dark green, we've gone a bit light green now, but that was that hesitation. So are we stalling? But anyway, let's let it run. Let's try and try to get too ahead of ourselves. So also cable back to 0.63 gain on that one as well. Let's have a look at let's see what our DAX has done. Has that continued to feed through? Let me look at the wasn't that one. It was the parabolic, the MACD one on the 5 minute. So there we are. We have stalled at that level we'd already had from a previous trade, which we would have got half of our position out. And so my stop loss is here now. So the rest of it may be getting stopped out as it's reversed, but we haven't yet generated a sell signal that I'll be happy to take on the DAX, because it's gone right on the perimeter of the overbought area, and we're yet to see the cross of the K and the D line in this case with our stochastics. Remember, our stochastics in this strategy are 10, 6, and 3. This strategy, the first signal is the touch of the outside of the Bollinger Band, and then we see the cross of the K and the D line. That's that way around the parabolic size, the MACD first, the MACD K, and the MACD and the signal line cross, and then the parabolic side either has flipped or does flip. That's where you play that one, but that's a trend following strategy. This is more of a mean reverting strategy, and that's what we're looking for here, potentially on the open as the volume comes down from the opening salvos of the 8 o'clock down a tad, but still much higher than it obviously was any time during the Asian session, at any time at the US or the midnight close and the US close here at back at 9 o'clock. Where's 9 o'clock gone? It's all the way back here last night. So there's the volume on the DAX. So that's technically looking for a short, but as you can see, the issue about getting in too early. See, we've touched, but we've moved away. So that I still bid to the upside. Our stop loss is still here. Or it would have been, as I said earlier, I probably wouldn't have taken that anyway. I'm waiting for some direction, but it's not. It's a bit directionless, isn't it? Here at the open, FTSE. FTSE still moving higher. It's trying to cross, but you see it's not mean reverting. You see it's crossing. It's gone back. It's crossed now, or it's crossing now, but it's not moved lower. Is this the start of the move? Maybe. Where did we get to? We got to 5. We didn't quite see there. We got to 5, 10, 5, 1, 8, or 10, 5, 1, 9. We didn't get to 10, 5, 5, 20. That looks like that might be our short-term top. What's our preferred strategy doing? I can copy. I don't need copy. Our MACD one. Let's start. Perhaps it's not quite a tweezer. It's not a tweezer top, but it's quite a relatively engulfing candle. So that's a negative candle pattern there at the top of that trend. One could argue, but I don't care. You see, I've got my stop loss here, so this looks like that might get hit this time. So have a look at. I'm guessing the Heikin Ashi candles are still green. Oh no, here we are. We've got a first of our red one forming. So again, let's actually just wait and see if that forms. There's still 4 minutes to go, so that could easily turn back to green if we move higher. But because we'd been really positive, see these are no wicks here for 1, 2. There's the data came here at 2 o'clock on this, but that's 7 o'clock, so it's the way it's 5 hours behind. It's US time. So that's the data at 7 o'clock, and we've moved higher. And so we've been consecutive 1, 2, 3, 4, 5. No wicks to the south candle. First wick to the south here. An hour after the an hour after the data. There's the data at 7. At 7. There's the 8 o'clock open. It's 3 o'clock here. Up to the upside. You expect that volatility, so sort of discount that one. Then we got 15 minutes of strong move higher again in the FTSE as far as the Heikin Ashi candles are concerned. But this is perhaps suggesting that we get out of this, or certainly take some profit off the table from the big move from 7 o'clock. So again, an hour and a half, nice move. And again, remember, we would have got in up here somewhere, not at the top of this candle. But it would have been a nice move. And this is obviously it's what I do when I'm using Heikin Ashi candle. When you have strong trend, just flip to Heikin Ashi, see if it's still positive without getting panicked out. If we just go to the like a normal candle setup, this is what we did yesterday in the webinar. you can see it would have been a much more choppy move up. Obviously, our MACD and signal light has kept us in, but if we just look at the colours of the candle, so it's the same 7 o'clock candle, big positive candle, but look at the number of red candles on this setup compared to the Heikin Ashi candle. Some people argue, well, the first big down candles, this engulfing one, was here on the normal candlestick. But you could have argued that was quite a negative one with a big wick. Was that the top, and you'd have got out too early? We then went higher. Let's see for confirmation. That's what I use the Heikin Ashi for. So we're about 2 minutes away from that candle completing. So this is still long. Our stop loss is here on this setup. The MACD and the parabolic SAR. A typical moving average setup or our crossing EMA strategy here. This is still long, although interestingly, that would have taken me out for the final time, or not the final time, but that would have taken me out there at what's 2 minutes? Hang on. Make sure we're comparing like for like. No, this is still long as well because we haven't closed below. In fact, that stop loss would potentially be there at the 9 period moving average at 10,509. So that's still in. Aggressive one might be the bottom of the third candle there, so it's a little bit higher, but that's still long as well. So that's still in. And the as we flip, this candle should complete. We go to the parabolic SAR. See, that was a big green, a big red, wasn't it? It's now a very weak red, but it might be enough to take some profit off, if not all of it. Certainly take a lump of it. As we've had such strong move, don't give profit back. The worst thing, guys, is seeing a profitable trade turn to a negative trade. But that isn't going to happen with this one if you trailed this up. But worst thing is giving too much back to the market because it always takes money back. But I might have been, there we go. So that's complete. I'd have probably closed at least 50%, probably 60% or more, maybe 80% or 75% or something on such a strong move. Again, psychologically, I've been doing this manually. It was very early in the morning here. I had a nice profitable start today. I could have gone away very comfortable. You don't get strong trends like this very often. So that's nicely bagged, and that I might even close the whole thing and just walked away. Thanks very much. I'll come back for the Canadian inflation if I can be bothered. But that's a nice positive start to the day. The FTSE's paid us really well, and the Heikin Ashi candles kept us in the strategy. If we go back to the, so that's taken us. Let's say we've closed that out completely, just for completeness, for demonstration. The 5 and the 9 is still open. Our stop loss, the stop loss on that one would be there. So we're giving a bit more back with that one. It's more or less the same period. So if we've because we've come down, the low wouldn't have been, if we've been trailing our stop loss up, the stop loss would have still been there. Otherwise, we have it for the body of the candle closing below the 9 period. The risk with that is that we have a big bodied candle, we end up down here somewhere and give too much back. But our stop loss would be there on that strategy. Open on out. Let's see what MACD on MACD. We put it on earlier, didn't we? There. So again, not as aggressive. See how once it rolls up. This is a good example as well. Once the trend starts to roll over, instead of being a catastrophic stop loss as it was there, the parabolic SAR, as the price was just closing here. As we've moved up, as the parabolic SARs have moved up, it becomes a more of an aggressive stop. So if you want to really start to trap some in, it's the risk of obviously getting stopped out now. We move it up to the parabolic SAR. If this then legs higher now, the parabolic SAR moves up much more slowly, as you can see here. So the parabolic SAR still continues to move up here, even though the price action hasn't moved up. So the danger is you have a consolidation and you get stopped out. But as you can see here, after the initial data came out, we went sideways for 20, 25 minutes, half an hour. but our parabolics are continued to ascend, and the price action was still biasing to the upside overall. Overall, this period we finished. Well, actually, we finished higher, didn't we, from where we started? So, and we might have the same here, or this might be the final rollover and give back. But again, like we said with the Heikin Ashi, it's been really good for us. We've been in. I mean, the other thing would be to wait for this cross as well. That's the other thing to do on a stop loss if you want to be particularly aggressive. Trail it up behind it, then the parabolics are, and then you give more back when the MACD and the signal line have moved further away, and they're going to come back to one another. So these will touch once this histogram gets down to zero again. So you might end up giving too much back. So I'm happy with that one there as well. So that's worked well because of the trend. So the trend following, as you see here, has outstripped our mean reverting strategy. So if we just go back to the mean reverting strategy here on the same asset, you can see the trend has outstripped any mean reversion. So we're in there from a let's move that now. So from a technical point of view, we've been overbought here from the stochastics point of view since 7:35. The first touch of the outside of the Bollinger Band was back here as the data broke at 7 o'clock, and we were waiting for this to cross to go short. So you may have, but it's been all of this. But I wouldn't have taken that as a short here because my other strategies, trending strategies, were moving strongly up, and we'd already moved quite strongly up. So you might have thought, well, it may start to tick, and it didn't, and it failed again there when it went down. It's ticked up, and we've gone. It's gone ticked back up again now. So that is not here. Hasn't had a clean. I suppose that one. I said that was a clean one there. Correct myself. That would have been a clean signal there, or the first clean signal at 8:15 short there. So that would have gone short there. Let me just correct myself. Let's not read too much in that. That would have been a short there. That would have been taken. The system would have been taken there. The stop loss would have been really tight. Given that we've had such a strong trend right that's just the top of the wick of that closing candle, that looks like that might be getting stopped out. It may have been where the Bollinger Band was at the time, but it wasn't there, was it? It was just a bit higher. But so that would have clicked short here, but you can see it's gone back. So I'd have closed it out because it's flipped back the other way. See what's happened there? So the trend has persisted again. So that's a failed entry, and that would have been a closed flat. I would have been out of that straight away. So this is still persisting to the upside. So if we go back to our Heikin Ashi system on our VWAP setup, this will have gone green again. There we are. See what I mean? So we've got out. See what I'm saying? I panicked to take it all out. Say I wouldn't have done all that 80%. So we'd have still had some cash in the market, and that's where the real prices are. 10.5 back to the 10.520. That first attempt at 10.520 was failing, and now you can see we're having another go at it now. So FTSE has outperformed the DAX this morning based on the UK data, which is quite unusual. This morning that my DAX is the favourite. What's happened to the DAX? And that's moving higher on this VWAP strategy, but we were. It's a mean reverter, wasn't it? It was a mean reverter, wasn't it? The trending still higher. There's that weak entry when it's turned out to be quite a strong one. We're still in it, and we've moved higher again. So I'm happy to move that stop loss up to that previous level now, and we are now moving higher. Again, that's a failed short there on that candle there. See, that was a positive candle, but the trend is still running. And now the blue has gone above the orange line, and we're now back into the overbought area. So it may be looking to turn around, but it doesn't matter because we've been long here from that week long. In fact, as I said before, I wouldn't have taken that, but that's the technical strategy. You would have. I mean, if you'd been taking all the technical strategies here in the Asians, I think you'd have been out of the money because it's just been going sideways and not getting anywhere. The spreads would have taken you out, but that would have paid off. A bit of a very risky entry. So the DAX first dip, locked some profit in, and then we've moved higher again. Sterling is coming back against the dollar as well. We're up to $2 now, and on our forex trade, the move higher that has paid off quite nicely. Again, we can move trail our stop loss up now, perhaps to the 20 midpoint of the Bollinger Band, and this is starting to move. So there's the cross that's paid out. That's where we got in, didn't we? We weren't using this one. We were using a different strategy, but anyway, that's where we got in. And our stop loss now can get trailed up as well. So those of you saying I don't actually trade, let's move this up to where is that? We're going to look at 35.72. So I'll add another 10 pips on that, 10 points on that. So 35.72. There we go. So again, guarantee we've locked in 10 pips or so from our entry at 61. So we can't lose. Again, you could just walk away and see how that pans out. But we are now moving quite nicely. But we have now, remember, that's target 1. So the midpoint of the Bollinger Band, that's where our stop loss is now. So we could have taken 50% off at that point, 10 points or 5 points, definitely banged from our entry. And now we've moved into the overbought area. So it might be looking to run, or may run out of steam here. It might not get to the top of the Bollinger Band. Remember the end of day strategy. It's first we got in last night up here at 36.25. We've taken that has taken 50% of the target of its target off, so 15 real pips points on that one on my trading platform. And if it reverses to T1, that'll be another 15 points guaranteed. So 30 points in total on that short trade. Could have, as Sterling's lifting, recovering from the initial spike lower from the data. And again, if this still is applicable. So the move of the data, you just put the little fib level. There was the low. Where might we first stall? Well, my target level from last night here on this 5-minute time frame from the data news reaction, is looking okay because it's above the 61.8 level. We've still got to get through. We've got through the 38 level. Oops, let's put that on. Leave it on there. We've got through the 38 level, which is the first key resistance. So it's moved up, and that happens to coincide with the Bollinger Band. So that's quite positive for our short-term long trade. So we've gone up. Our next resistance might be here at the 50% at 135.82. And then the key resistance is the big, as you see here. It's like magic, isn't it? Fibonacci. The first 5-minute reaction to the news took us down to 35.89.7, and that's where the 61.8 fib sits. So that's the next 2 levels to the upside we want to be looking for. So again, you can, like, as this continues to move up, right, really stop loss up. But you can see the last 15 minutes, the move higher has slowed down, hasn't it? There's quite a move for 10 minutes or 20 minutes since the floor, since we got in, and it's sort of petered out in the last 10 minutes or so. So let's see how it runs as we've gone into 8:30 and now into the 8:30 to 9 o'clock window here on Sterling. But it's in the money. We're at $2 to the good, and we've locked in at least 10 pips on that move to the upside. Right, I've been here over an hour. I've got no comments from anybody. I'm going to close this out now, my friends. Tomorrow, big day. Tonight, we've also got the RBNZ with their interest rate announcement. Let me just put this up for you for later today. Overnight. Before that, we got the inflation numbers from Canada this afternoon, expected to remain fairly steady, no change expected, but watch them anyway. Remember, we had those inline numbers out of the US, and then that core number was a weaker numbers for the headline, but the core number was in line. So let's have a look what the Canadian threesome look like. Remember, we get median, trimmed, and common out of Canada, and then we get a number for the average of the two. But the median and the trimmed, or the median is the one and trimmed at the two that the most analysts look at. Okay, and the common tends to drift a bit higher. Also, Empire State turned positive last month. Remember, 7.7 from a series of negative calls the previous few months. We had gone as high as 16. So very volatile numbers you can see here. So it chopped around, but we started to see some positivity now. We've been negative for most of 2025. Can we continue 2026 in a positive vein for the manufacturing sector? Remember, we had that 5,000 gain for manufacturing jobs in the non-farm payrolls on Friday. So have a look at that later on as well. So dollar CAD might be in play at 1:30 this afternoon. And overnight, as I say, we got the RBNZ. No change expected, but have a look at what the press conference throws up later on and what's in the statement. Any words change tomorrow also is durable goods. But we'll be with you for the minutes from the FOMC tomorrow night at 1900 hours GMT, 7 o'clock London time. I'll start that as usual 15 minutes early. So have a great Tuesday, my friends. Watch that CAD data and the Empire State manufacturing. If you're trading this afternoon, I'll be having a look at my intraday systems today as well. And I'll update my end of day systems. And I'll also update you, see how our opening trades this morning have got on, where we got stopped out on the FTSE, the DAX, and the that cable trade. All of them in the money. So take care. Any questions, let me know. Do come and join us at the proptrade.com. We've got a whole range of offers currently. The Valentine's offer is still running, if I remember correctly. On our Discord group, we were still pushing that as an offer from last weekend. Where's the announcements? Is it in the announcements? Oh, that's MT5 active promotions. There we are. Valentine's offer that's still running out. So we've got 100% profit split. So you keep absolutely everything. A 20% discount off all challenges and across all platforms. Remember, we launched our MT5. A lot of you have been waiting for that MT5, the technicians C Trader platform, the technical trader, and what we started with was Trade Locker. That's what I'm demonstrating here is Trade Locker. I will get an MT5 account as well. VDay 20 for a 20% discount across all our platforms, across all our accounts. It's running out soon. There isn't actually an end date on that. So, but have a look for yourselves and speak to the guys on the Discord group. Christian, Tom, Katzen, they're all there to help you. So take care. I will see you tomorrow. Have a great Tuesday and be kind, my friends. All the best. Bye-bye.